Well, it's all happening. Equity markets are under pressure, commodity markets under pressure, Aussie dollar under pressure. It's all happened. Thank you very much for tariffs, Mr. Trump. Okay, major headlines. We know US equities slump. Liberation Day. Is it or is it not? Fed Governor Powell says economic fallout could be a little bit worse than expected. I think he's probably right. The S&P shrunk 6%, the Dow down 2,200, the Nasdaq lost 5.8%. It's still under pressure this morning as we start the week. That was last Friday. West Texas crude oil sank 7.4% on Friday. Gold slumped 2%. Copper, the litmus test for the global economic, sunk 7.5%. So, and also the Aussie dollar. The Aussie dollar absolutely collapsed, shellacked, and that traded below, obviously, that 60 cents area. And I think a lot of people are expecting more to come. So I guess across the board, the market is extremely volatile. It's very hard to sort of try and get some clarity. But what we do know is that the tariffs that have been put in place is a tax. It's either for the US to raise more money, the US government to trim back some of its massive deficits. But remember, any of these tariffs, what actually does occur is that the importing company pays them and pays it to the government, and then they look to recoup those costs either through increasing the cost of that good or they absorb it. Now, given where we have with readjusted earnings, particularly in the States, I don't think it's looking that pretty. So I think that there will be an open area of sort of negotiation, and I think it will be quite severe, or people are just going to retaliate. Now, this area of protectionism now comes into it. What does it actually mean? Probably means that we're in for a lot lower prices in a lot of these things, because I think the economic fallout is a lot higher when we really start to go through the nuts and bolts of it. Particularly when I look at, say, some of the commodities like copper and oil. Oil's under an enormous amount of pressure, same with copper, because people are starting to think, well, okay, well, what is going to happen next? And I think the fact that we know that we're open for a lot of trade wars now, the market sort of is unsure as to where profits will actually come, and hence sort of some people are sort of running to the sidelines. We're certainly viewing this slightly differently. We think that this is an opportunity. Since 1987, we've had 7 times we've had opportunities to buy. So we're really looking at this at an area where we can start to put in some good investment strategies, whether it's CFDs or whether it's equities. You get some good names, some good levels, and some good valuations. And this could be a trade which could last for another 5, 10 plus years. So keep close to it, keep your powder dry, and just follow some of the recommendations that we do have. Okay, so I've had a little bit of a recap, as to what happened on Friday. I think this is going to continue. I think the market volatility that we're seeing is here for some time, and until everything, the dust settles. And I think, to me, that's one of the big issues. I think Fed Chairman Powell, when he came out and actually said, look, I think it's bigger than actually what we actually think, he might suggest that the Fed is quite cautious about what they're going to do with monetary policy. I think the other thing to really think about is that if equity prices remained high, then I think that is highly inflationary. But commodity prices have actually come under pressure, and to me that's a balancing act. So whilst you see demand start to come off, you haven't got those areas of inflation which we thought we did, particularly when commodity prices were higher, when we said, okay, we've got this stagflation type of feel starting to occur, which the Fed did comment on, and so did we. So I get a sense now, with commodities coming under pressure due to lack of demand, I think that's a balancing act for our inflation. So whether we thought inflation was really out there and starting to pick up, as was predicted from the University of Michigan expectations of inflation index out for 5 years, we had around about 4.1%. So I think that'll start to peel back as the economies start to get involved with how protection will work, and how that'll just sort of like slow down the economies. And I think that's what we're going to see. So I think that inflation is going to be out there. But I do think the Fed really has to now start to make up its mind in terms of, does it start to ease rates because the economies are starting to falter. Too early to tell yet, but I think that's something that the Fed Powell is certainly focused on. I wouldn't be surprised that the recent rhetoric has allowed us to change our views a little bit. Let's see what happens to things like the CRB index, which is an overly good thing to look at because it gives you an idea of what all the commodities are doing. And if you get a sense of saying, okay, commodities are coming back, there is that balancing act. Okay, inflation is not too much of an issue now. We know it's already coming back. We thought it might still be with these tariffs be inflationary. So tariffs, we did say, represents inflation, but with commodity prices coming down, I think that that's off the table for the time being. So let's see. But if anything there, big correction. We've looked at it. I've sort of put a chart in this week's report, which is the S&P 500 against the ASX. And also against the Shanghai Industrial Complex. So if anything there, I think more correction to come. Okay, if we really look at it, the commodities markets, as I said, West Texas, we're seeing a whole redistribution of supply dynamics. The supply chain has all been distributed, but whilst that happens, we'll see economic growth start to slow down. Like Australia, where does it focus? If it's not selling into America, where else can it focus to? And I think a lot of these decisions are now starting to be made. And I think if anything there, that more countries are going to start to make different decisions. So let's see what happens on that front. Okay, investors, we've talked commodities, copper under a lot of pressure. Expect that to continue. Remember also with copper, we've always said there's a supply deficit there. Now that's sort of now off the table a little bit because people are starting to make decisions to say the economy is going to slow down. Therefore, we don't need as much as we need of the copper. So commodity sectors are coming back. Now this week, trade war will remain a main theme. There's no doubt about it. We've got to anticipate more responses from other countries now because they've been across the board. We've got FOMC minutes, might give us a little bit more insight as to what's happening. And I guess over in Europe, we've got some retail numbers, German industrial production, and in China, we've got the March inflation report. We'll see what happens there. So lots on that front.